Seeds of the team.
All right, ladies and gentlemen, welcome back. It is April 5th. We are 5 minutes before the market closes here, coming at you. We got chart talk number whatever we're at. We got a very volatile market on our hands. Let me give you a quick story about how my life's been going, Bennett. So I think I'm about to close. I'm supposed to close on my Denver house that I'm selling, last Friday. So to celebrate, I took my girl to Catalina Island. We had like a great little weekend. But I literally land there Friday. And mind you, I'm celebrating closing on the Denver house. And I get a call from the realtor as soon as I land saying, there's different, we're starting good. That, there's problems with the closing, problems with their financing, my roof. I had to redo my roof completely. It's not finished. So we got to push back the closing. So I'm like, all right. Whatever. It just pushes back the closing. But now I'm like over there celebrating. Like, all right, now I don't want to spend the same money I was spending. So whatever. We go to the first bar. We get some oysters, and they have a bunch of different oysters to choose from. So one of them was from British Columbia, and I'm like, oh my god, I love British Columbia. Me and Ben and a bunch of guys, we went hella skiing there. Canada was so good to us. We'll do the British Columbian oysters. So, I eat the oysters, and 2 days later, I'm just, like, disgustingly sick. Yesterday, I couldn't even sit at my desk. I was dying. And then I find out that there's this new, it's called the norovirus. It's the new strain that came in from British Columbia through the oysters. So I could have picked any oysters in the world, and I decided to pick the British Columbia ones. I'm sitting there, I'm eating. I'm like, I fucking love British Columbia. Oh, it's so good. And then they ended up being the absolute death of me. So I'm finally back. I've recovered. I'm feeling skinny. I'll tell you that much. But it was just so funny that British Columbia. I had to pick that one. But without further ado, let's get into the market outlook.
Let's do it.
So we had this huge run up. And like we were saying, we were expecting more of a range-bound market. I thought we would get more of a run-up off this pivot Friday. So we had this run-up, and we came in, and then last Friday we began to pivot, and it looks like the market wants to head lower from here. So we have the Fed minutes tomorrow, and the move that prompted today's sell-off, it was kind of a bull trap, was one of the Fed's presidents came out and said, we might have to be more aggressive with raising rates. So the market didn't like that, even though it's pretty known at this point, which was kind of surprising to me. But we'll get more information in those Fed minutes tomorrow. But that's what prompted the sell-off today. So it looks like stocks are heading back lower. And again, we're in this range-bound market. I have the S&P up, the SPY, the futures. And it looks like, somewhere between 420 and 460 is going to be this new range. So, that's kind of what we're dealing with. And we're going to have to go back into, the style of buy the ugly and sell the pretty. So I got kind of trapped this week. I was buying a little pretty, and I got punished for it, and it just kind of reinforced the thought. We're in this very volatile market. When things are looking good, that's probably when you want to be taking profit. When things are looking horrendous and scary, that's probably when you want to be buying. That's pretty much it on my end. What are you thinking over there?
So just going over a couple quick sectors. We have utility sectors is still very strong, and that's probably more of a bigger clue, like what you mentioned, that we're going to stay in this more range-bound market. When you see the utility sector breaking out to new all-time highs, it looks almost like the tech sector a year ago. That's a pretty big red flag that it's still kind of risk off that we're in this range-bound, because if utilities are breaking out, that's kind of like a flight to safety that you can assume. So seeing that breakout, seeing that even we were trading some utility names last week and they were actually breaking out. That's kind of like a little bit of a clue to kind of take the foot off the gas pedal. We saw a few other pretty strong sectors. Consumer staples, again, a pretty more defensive, safer sector, very close to retesting its prior high, pretty strong. The material sector, pretty much perfectly retested its prior all-time high, so it looks pretty good. And this is like the opposite side of, I have my chart turned on, chicks. I know you can't see it, but where you can see the little circle drawn, this is like the material sector is breaking out of that little range that it was in, where for the S&P, you can imagine like this green line is like the 460 area, that it's still acting as resistance. And eventually, when the SPY can get above this area, we can expect to move back to highs, which is what we saw in the material sectors. We're just not seeing that in the broad market. So that's just kind of like a clue of what we could expect in time when we can break up through 460. And then lastly, another one of the last other strongest sector, we have obviously energy. But like you mentioned earlier today with like Oxy, with it looked amazing, but it could potentially be start to break down. Same thing here, very clear uptrend in the energy sector as we start to flag out near these highs. But given how much it's gone in the last few months, breaking this downtrend could be much more likely, for a shakeout than break it through highs and it continues. We have the tech and consumer discretionary sectors trading very similar. I would call them like brother and sister in this perfect range, trading very similar how the SPY is trading. Again, kind of that risk off. We want to be taking profits into resistance until we see that strong break. So for like VGT, it's that strong break up through 430 in time after it kind of pulls in. Same with VCR. Right now the 200-day continues to act as resistance. That's like 320 in VCR. And when it can let it pull in, let it set back up, and eventually back up through that 320 is when we want to be more aggressive and more involved. And then two of the weaker sectors, we have telecom, which is very clearly still in this broad downtrend. And the biotech sector, same thing, still in this kind of stage 3 breakdown that's just still kind of in a void. So that's just kind of looking under the hood a little bit closer. And Jake, if you want to get into some top ideas, we can go over those now.
Yeah, exactly. Just one quick thought. I have the crude oil futures up on my screen here. The only reason I was thinking that Oxy, I was saying like Oxy might go back to highs, and now I'm thinking it's a short very quickly. They came down to an inflection point. And, the price of oil has come in a whole lot. It was up at 130 a few weeks ago. Now it's pulled into that 100 area. It's finding a little bit of support. So I was thinking we bounce because nothing's greatly changed in the macro environment with the gas and obviously the situation of Russia and, people not buying Russian oil and things like that. Yes, the U.S. is going to release some reserves, but nothing's greatly changed within that environment. So my thinking was we see those bounce because everyone's thinking oil's topped and things like that when really nothing has greatly changed. But thoughts and ideas are always great, but price action tells all, and we're seeing crude oil sell off once again. So it's looking like I was wrong in that regard, and that oil is ready to come in some more. But let's get into some top ideas now. So we're seeing the SPY and the Nasdaq. We're seeing them come in. So the long ideas, they're not looking so pretty today, because of the downturn we saw in the market today. So a lot of these setups, they're not ready to trigger just yet, but they're still going to look good for when we do get that bounce. I'll start with this Checkpoint Software Technology. So I like this chart a lot on many time frames. Yeah, a lot of I don't know about a lot of people, but people were buying it today. It triggered that 142 area. If you look on the weekly chart, it's turning this massive recent resistant area. Back from December 2020, that 140 area, that's kind of turned into new support. You go to the daily chart, and it has this nice little flag. It just looks like it wants to turn back up to highs. I'm not sure if that one's ready yet, but we'll keep an eye on that one. Humana, HUM. So strongest sector today, healthcare. I did not see that coming, but good to have it on the radar. This Humana's looking pretty good through this 445, 448 area. Can you hear the dog barking in the background? Do I got to go lay the...
No, it's not bad.
I'm about to go lay the hammer. About to have PETA up in here.
Nah, it's okay.
Okay, all right, so chill. All right, so Humana looks good. The COO, this has a massive overhead resistance level. Medical devices is Cooper Companies. It needs to flag out more, but above this 430 area, that was looking pretty good. This LMT, it threw me for a little loop today. Obviously more of a war name, defensive sector. So it kind of gave us the shake and bake today. Didn't want to break out with the market weakness. And yes, it's been on a crazy run, but this is more of a momentum setup. I think this one still looks good through that 455 area if it breaks that wedge to the upside. Same with that NOC. Similar setup there. Yes, these names have been on a crazy run, but it's more of a momentum setup. So if it can, sustain a move to at 460, 464, that one looks good. JAMF Holdings. This 36 area, just massive base, massive daily, weekly, monthly base. If it can bust through this 36.25 area, that one looks like a great setup. This MAA, a little bit of a shake and bake today, but REITs have been so strong. We've been saying that recently. Kind of fell off today with the market turning down. Again, you're going to hear me say that a bunch. But through this 215, 216 area, that one looks pretty ready to go. BSX, this 45 area, huge macro level. What I don't like about this name is that it's so choppy. I've kind of made it a goal in my trading to avoid names like this that are just unbelievably choppy because you rarely get like a sick follow through breakout in these stocks. But I'm keeping it on the list. And then this Oxy, where I thought it was going to be a short, now it's looking like a long. I'm kind of upset with myself that I let this Lennar. I love this Lennar short. I think these home builders with things that we're seeing in the mortgage rates and things like that. With if you look at like existing home sales and new builds and things, you're just seeing those names downturn, and then this Lennar is like the apex of the housing market. I think that's ready to come down a bit. So I was mad at myself for not focusing on that. So this Oxy, I hit a little bit short today. Maybe it'll give me another opportunity. But we had a lot of ideas go the past few weeks, so it might be time to cool down a bit with the setups. We'll see what this market wants to do. What are you thinking over there? You got anything new you're looking at?
So I got a few. So you were talking about REITs at MMA before. This ESS is blue sky breakout, multiple attempts. I think actually Kusha called this one out. One of the members did a few weeks ago through that like 345 area.
Huh. Was it
very? Maybe it was you. I'm not sure. Someone called it out. Maybe they were calling it out.
I wonder who that was, huh?
Yeah. So that again through that 360 in time looks amazing. In that again, that REIT space has been pretty strong. Your calls through 64, probably not going to happen anytime soon. KSS. But that KSS still looks pretty good when it's going to turn back up to 64 or not, as it's kind of going to shake out this low of the flag. Kush has actually had some really good charts lately. This KBR tech company, again, flagging up here near highs up through this 56. You can either kind of trade reverse 53 or 52, kind of the low of the flag. That's more of like a momentum kind of swing trading setup. This WFRD, again, another one of Kush ideas. If you zoom out, this is like one of, at least for me, my favorite kind of IPO setups where the name sets up and then whenever it goes public, so 2 years ago, has initial pop, stock gets destroyed, bases out, and then works its way back towards those highs. And often that's like one of the easier trades with the IPOs where you can just buy it through that IPO high after a few years of it developing. That, for this name up to this 36 in time, could be more of like a longer term trade, not one that we're going to buy 36 and look to sell it at 40. One where like you're going to can buy it light, be very patient, and give it 6 months or a year to see where it kind of can drift up to. That Cisco still basing up to this 57 for some time. Lower beta tech name that it's like when we used to trade Microsoft back in the prop days, like you can get very heavy in it because it's not going to be a name that you have to really risk a crazy amount, and you shouldn't really be expecting like a $10 move in Cisco. If we can get for $3, $4, $5 at Cisco, that's a pretty significant move in the name. And last but not least, this BCPC, just been basing out for some time, and we saw the very obvious downtrend that we want to avoid, and then now it's been basing out for the last month or two, and looking for an entry up to that 142 versus like kind of 133, 134 for now. So those are a couple of the days I'm keeping an eye on.
Oh, that's good. I want to add one more. Is this ARC short? It went on this crazy run over the past 3 weeks, up 30%. We were wondering if these names were coming back, but we were also taking it as a very negative sign in the market where it's not like the leaders were getting bid up. It was names like Shopify. And as much as we want to see those names come back, they're just in such deep downtrends at this point that once they fail these these downtrend resistance lines like we're seeing in ARC, it looks like they're just headed back lower, and that's the same thing that's looks like it's going to happen to this ARC. So that one's looking like a short back to lows to me through that 66 area.
Mm-hmm. All right, so you want to go some good and bad trade?
Oh, would love to. Bennett. All right, so I was very frustrated with myself these past few weeks because I traded well, but I didn't make the money I should have for recognizing what I did, putting the risk on where I was, and I'll go through it. So we saw the market go on the run, and I'll just bring up the Qs. I'll bring up the SPY so you can see it a little better. We went on this run here, and then we have the 200-day moving average, or this huge resistance level sitting right above. So what I did really, really well last week was I completely got out of my longs March 29th and 30th. I got out of this AVGO. We were buying 608, 610. I completely got out 640-ish. This CrowdStrike, shouts to heaven. He got us in this one. 192 is my price. There's this 230 area was a 200-day moving average. Completely sold into that. What else? This AMD, thing turned into a disaster. But from where we had it, the 112, 114 area, I was able to sell into that 125, and then I got completely out at the end of the day into that 120. That was really great. And this Juniper, JMPR, we bought this 3450 area, completely sold it all, 3750, 38, like great exits. I thought the market was running into huge resistance, and I'll tell you where I effed it up. So I began getting short the market the same day when I thought it had topped. Let me try to circle back here. So this is the area it began to top, and I'll explain the trade here. I got a little bit short here, the 369 area in the Qs, and then it reversed right in my face, so I got out of that size immediately. But then I spent the rest of the day just putting on massive size. I had a huge position short. I'm giving it the right amount of room. And, I thought we would just have a 3-day pullback. And my mistake in the trade was, thinking we're just going to have a 3-day pullback. So we're going to bottom soon. So I was very quick to take profits, very, very, very quick to take profits when the trade wasn't telling me that I need to take profits. So I get very short, and I begin to cover some at the end of the day here, and I took off like 60% of my position, maybe 65 for peanuts, for $2-3. That was a huge mistake, and then it bounces, and we get a bounce the next day, and I'm covering everything into strength. So when you're short, you obviously want to cover into weakness, or you want to get stopped out at big levels into strength. So again, I cover some into strength here, not what you want to do. Cover some into strength here, not what you want to do. And then I finally cover some into weakness into Thursday, Friday. So, but I'm holding a piece against that high so that I can re-short. All right. So then we see the market come back. We get a little pop Thursday, Friday into yesterday, and today I don't know if you saw me in the chat. I was like, it's almost funny watching the Qs trade against the SPY, because the SPY was looking strong and the Qs were just so incredibly weak. So I put another decent amount of short on, and right away we begin to bounce it, and I just get out of that ad right at my price. And then the Fed's Bullard, the president that came out with those comments, comes out with those comments 5 minutes later. And if you look at my chart about where I covered, I covered it all today, 367. And now we're down at 361. It looks like we have more downside ahead. So I messed up 2 huge shorts that should have, been super, super profitable to me. All because I was in my head about taking profits and what I thought the market would do, instead of just reacting to what the market was actually doing. And again, I am a vagina to the short side. That's all I've really learned about myself.
You're such a pussy on the short side. Go home and get your fucking shine box.
It's just...
I don't know if you could say that entirely, considering you had like a 7-figure short on, so, maybe not.
Yeah, all that stuff's good if you make the money from it. I had the 7-figure short on. I covered it for what, 0.25%. Sick. What a beast.
Yeah, that's. Do you think that if you had like a lighter position, you would have been able to like let it rock a little bit longer?
Maybe. Maybe that's the thing. I gotta contend with myself personally. Maybe I was too focused on the size and the dollar amount of the short than I was with the actual position, which clearly I messed every part of the trade up. I was covering it to strength, weakness, whatever it was. So just a lot of lessons there, in the fact of, if you're going to take a trade, take the ride. And then another thing I want to talk about is BRCC. It's the difference between a profitable trader. Oh, yeah. The difference between a profitable trader and a fucking rich trader is... So I had a huge position, BRCC. I had 8,000 shares from 17. I covered, probably like, 30-40% of it into this first 3-day move. I'm not too, you can't see the dot on the screen because it was too long ago. I'm not too mad about that. But then it was like later on, I covered a big position, big big part of the position. You'll see here on my screen on the daily chart. It was March 30th, and it was really for no reason other than, I had a lot of P&L, open P&L. But the lesson here is like the stock never told me, and you'll see I covered the rest of it into yesterday, and there are amazing covers yesterday, but it was only a quarter of my position. The difference between a good trader, a profitable trader, and a really rich trader is having the balls to hold this position on for the big move. Because even when this thing's consolidating, when the market's selling off or finding weakness, nothing about this stock was telling me to sell it. And we could look at the intraday, and I was staring at the intraday every day, and the stock was like dead. It was doing absolutely nothing as the market was selling off, which is a great sign. It was like the stock wasn't trading. In the future, if that happens to me, I need to just hold that position because it's telling me it's got so much relative strength. So, we got that big move yesterday, and I sold almost all of it yesterday. I sold the rest today, and those were great sells, but I didn't have the portion of my P&L that I needed to, and this trade should have made my year, made my entire year. It had a 28% up day. We made 70% in 8-9 trading days. It's crazy, and that doesn't happen often, so it's hard to plan for. But when that happens, you need to fully I'm not going to get another trade like this for another 6 months, So the lessons here, and I'll talk about this later in the book of the week, is my exits. My exits have been very trash. My entries have always been pretty good. It's always been a strength of mine in trading, but the exits are where the real money's made. They say the easiest part is buying a stock or shorting a stock, getting the entry. And the hardest part is taking profit. And that's just something I clearly need to work on with what my exits are telling me lately. I'll get into that a little more later, but what you been up to over there?
Even your BRC, that reminds me of Oxy, where it was the same thing where, again, this was anyway, I was trapped in pre-pandemic and I was just kind of working my way out of it. And when it had this big 3-day move, it was all right, it's doji at highs, another doji. Am I going to give this thing, my average cost basis was in the 40s. So I'm up, a decent amount. I'm going to feel like an idiot if this thing reverses this move in 2-3 days and it's back to 40, and I feel like a moron. So of course I take it off, and then the next day is the biggest day it's had in 2 years. It's literally the following day.
Right.
And there was no reason, in both, just like where with the name you were in, how tight it was trading. That prior lower day stop or the prior pivot was 75 cents to just give it the room, or even this was the same thing. It was such a de minimis amount of risk to really give it, and then to be somewhat involved in that neck. Not to say I would have been in until 60, but I would still have the chance to determine what I would do in it. That just reminded me of one of my trades. But for the 3 from last week,
Can I get into one? Can I get into?
Yeah.
Let me add to that BRCC to make it even worse. Mm-hmm. What name were you just talking about? Whatever it was with the IPO high.
Let me 1 second. Hold on.
Whatever it was, the best setup in trading when a name takes out its recent highs, it's a recent IPO or whatever, and then it's off to the races. That BRCC, the 27% day came the second it ticked over its all-time highs, and it was just because everyone in the world is gonna have buy stops there because it's a very known setup. And it was funny. I was telling some non-TE friends. It was trading is just finding different ways to hate yourself. I got out of all my longs at the top, and I got short, but I didn't capitalize on it enough. And I did really well P&L wise, but I'm sitting here hating myself for these executions. Don't you worry.
Yeah,
that's what I've learned. Trading is just hating yourself.
So anyways, a couple trades last week. On a less depressing note, first one was the CSL. This actually was one of Cush's call-outs. I feel like I've been just taking all of his trades lately because he just has been doing phenomenal chart work. But try this CSL through this 250. Tried to buy through this all-time high breakout. Wasn't ready. Was a break-even trade. Lost nothing. Not a big deal. Other one was this HCA. Same thing. I'm trying to buy up through this all-time high. It's kind of like that little sneaky buyback up through that prior level we can see here, but wasn't ready. And kind of the only kind of mistake here was I got stopped out. It's always when you keep them tight, you get shaken out, or when you give them the right room, they make sure to go the exact amount of right room. So this was one that I bought. This was, what was it? March 28th. This bullish engulfing day looked great through 264. Next day, kind of little doji day, and I'm you know what? I've been upping these stops too much. Let me just give it first a pivot. Give it the right amount of room and stop moving the stop so quickly. I give it the right amount of room. Next day opens and just bearish engulfing and goes exactly to where I need to have my stop and it push me out, which is fine because now it's obviously 20 another 15 points or 10 points lower from where I got out. But this was one of them where I could have probably just like I normally did just lost a few bucks in it. But it is what it is. And then the one that did work, this DUK, we talked earlier about the utilities being very, very strong lately. And if you look at these three trades, all kind of the same thing. All names near all-time highs, all names trying to break up through all-time highs. Two of them failed. CSL lost nothing. HCA failed. I believe I lost like 2%, maybe 3%. And then this DUK worked. And I bought it through 108. And we were talking with one of the members earlier this week about measured moves. And this was like a textbook, the measured move it went. So the low of this recent flag was 104. Resistance was 108. It's a $4 range. I should expect a $4 move in the short term. And if I draw this little line here to dictate what a $4 move would be, my target was 112. That was a $4 move from 108. And it happened on this day right here. And at this point, I don't want to cap my upside. I don't want to like sell into 112 and then if it wants to continue higher, I get rid of it. At that point, I just move my stop versus 111. So if I wanted to trade lower, it would shake me out $1 under my target. And if it is what it was. So this was like a good, for me, it was like a good trade. Even though it's still trading higher now, I just stuck. It was a simple trade through all-time highs and just looked to take profits in the measured move. But this name is, again, probably going to still drift higher. I probably kept this up too tight. But again, I just want to lock some money in. And those were kind of my three trades for the week.
All right. Very nice. Very nice. Very nice.
All right. So on what book of the week?
Book of the week. So do I have it right here? I don't have mine with me, so I'll just talk about it. But it was just Atomic Habits. I talked about this one a few weeks ago. I revisited it. And it had a good lesson on, what was it? The aggregation of marginal gains. It's a philosophy of searching for tiny improvements in everything that you do. So if I wanted to break down trading into little subsections, I would break it down into four simple ones being entries, exits, stock picking, and timing. Okay? So, like I said, my entries have always been pretty good. My stock picking's always been pretty good. My timing's always been pretty good, as I was talking about, but my exits have been absolutely horrendous. So when I break it down into those subsects, it really shows me what I need to work on and where I need to improve. Sometimes I catch myself always focused on the next trade, and I don't, focus on the trade at hand as much, and I mismanage it. And, that's what I was saying with those, that Q's short I had on and things like that. So that gave me a nice little trading lesson into you have to work on the micro aspects of trading to truly get better. It's not just, I shouldn't have bought at this pivot or, I do a lot of trade reviews and it's like, oh, maybe you shouldn't have bought the resistance there. Maybe your timing was wrong, things. I think you need to go a little deeper into your own personal, workings and figure out, where the mistakes are coming from. So with everyone, it's different. For me, it's just so clearly my exits. But that's it for my book of the week. What you reading?
So since you mentioned Atomic Habits,
Ooh.
I have our book, Getting Started.
Hey,
which we have the habit stacking lesson in here that relates to like the core content of that book on trying to like insert new daily habits in your daily routine, and we kind of take that lesson and tweak it to relate to trading and learning a new habit. So I'm just gonna shamelessly plug our book.
Plug it, baby.
So I think we're
all right. With that, we wrapped it up. April 5th, Chart Talk, all done. We'll catch you guys next week.
Oh, Shay, before we go,
because
we have the rally is in 2 weeks.
Ooh.
What is the over under that we're gonna see your RV pull up to the Marin Estate in Virginia?
Man, I would love to see it. I would love, no one more than me would love to see it more than you. And it's all depending on whether my buddy or not can get my lady into the wedding. If he can't, then I will see you. If he can't, then I'm sorry. We weren't even that good of friends to begin with. And I'll see you at the rally.
All right. Well, that's it.
All right, folks. Catch you next week.